Hello and welcome to my morning note. There's plenty of concerning news today. If you look at the Chinese trade surplus, it's the highest in 3 years. So they're not buying quite as much of the rest of the world's stuff as everybody was hoping. Meanwhile, Spanish 10-year bond yields have gone back up above 7% again, suggesting that the very warm sentiment that we saw immediately after the EU summit has already dissipated, even though there does appear to be very strong progress on the details for arranging the bailout of the Spanish banks. But are we in fact all looking at the wrong place? After the summit, Irish eyes are smiling, and indeed the Irish bond yield has now dropped below that of Spain. What is happening and what could be the significance of an improvement for Ireland? With me now to discuss this is our economics leader writer, Martin Sandbu. Martin, thanks for being here today. Let's take a look, first of all, at Spanish and Irish yields. What's driving this? Why do you think Ireland is now suddenly regarded as a better credit than Spain?
Well, it's a stunning picture, isn't it? Back in the days, everyone was low and getting cheap credit, right?
Yes.
This spike here, that's the Irish rescue towards the end of 2010. And we see after that they were completely locked out of the markets while Spain was still doing well, 5%. It was only here that Spain was getting stressed. And as you pointed out, just in the last month, the last couple of weeks, we've seen the Irish yield go down, Spanish yields go up, and they've crossed. Why is this? Well, it's probably a mix of genuine admiration for what Ireland has done in markets with investors, and a reflection on what seemed to have been agreed in that summit you just referred to a week ago, and again reiterated and put in detail yesterday. There were two very important sentences in the summit communique. One was, we'll take another look at Ireland, I paraphrase. Another was, similar situations will be treated alike. In other words, if we're getting a new framework for Spanish banks, we'll have to apply something like that to Irish banks. And of course, the Irish yields were so high because the Irish government took on all this private bank debt, foolishly under pressure from Frankfurt and Berlin and Brussels. But maybe there's a way to undo some of that damage.
Okay, now that would be good, because let's take a look at what the economic damage has been to Ireland. And if you don't mind my channeling my inner Paul Krugman, this is not exactly an advertisement for austerity, is it? It's been a horrible economy in the last few years in Ireland.
It's just terrifying. I mean, we should remember that there was very solid artificial growth maybe before 2007-8, and some of that had to go away. But this is just painful. Unemployment rates up to 15%, and of course what you don't have in the chart is emigration. Has picked up again, this traditional safety valve in the Irish economy, but of course devastating for basically social well-being. No, it's true. It hasn't done anything good for the Irish, except maybe they've shown that they can do this. They've done what the Eurozone has told them to do. They've done what investors want them to do. And maybe, just maybe, there is some reward in sight. That would be the only thing that could redeem this horrible picture.
Or there may be a reward in sight now that they've fixed the mechanism for bank bailouts.
If they do, that's true. But we shouldn't forget, and I think you have another chart coming up, what is different between Ireland and some of the other countries in trouble is that Ireland is more or less paying its way.
Yes, let's take a look at Irish exports compared to, or trade balance rather, in absolute terms compared with most of the other large countries in Europe.
That's right. This is exports minus imports, the trade balance. And in absolute terms, as you said, these are billions of euros. And Ireland is the third, not just in the Eurozone, but in the whole EU. The difference between how much it exports and how much it imports is the third biggest, after Germany, of course, we know, export powerhouse, Netherlands, big natural gas exporter. It's quite impressive, really.
So they can produce the funds to pay their debts in a way that arguably Italy, or let's not forget the UK and France.
Absolutely. The thing is that Ireland is actually selling more than it's consuming, which means that over time it can service all these debts. And that's what investors want to know. And it's probably what some of the surplus countries in the Eurozone want to know as well. If this continues, now we know it's shaky because of the Eurozone downturn and so on, but if they can continue to do this, well, there will actually be money to recover with, as it were.
Okay, Martin, thank you very much indeed. In the midst of the pessimism, yes, there is an interesting argument There have been false dawns in Ireland before, but there is an interesting argument that maybe austerity in Ireland may now begin to pay off.